Did you know that in 2026, the safest investment in the world is being overlooked by millions of Americans who could be earning a 2 to 4% return on their money, tax-free? Today, we're going to break down what Treasury bills are, how they work, and why they're the perfect addition to any investment portfolio. Treasury bills, often referred to as T-bills, are short-term government securities sold by the U.S. Department of the Treasury. Think of them as a loan to the government, where you lend your money to the government for a fixed period of time, usually 4, 13, 26, or 52 weeks. In return, you receive a fixed interest rate, usually between 2 to 4%, which is tax-free. Imagine you're lending money to your neighbor to fix their roof. They promise to pay you back with some extra cash as a thank you for the loan. That's essentially what you're doing with a T-bill, but instead of your neighbor, it's the U.S. government. The government uses the money from T-bill sales to fund its operations, pay off debts, and finance its spending.